Good morning, everyone. Reviewing Thursday stock market, I'm going to start it out with the biotech S&P index. You can see the XBI, and what I want to make notice is if you can see here, even though we closed higher than where we open, we finished in the lower half basically, or around the mid-range level of the intraday range on Thursday. Volume was much higher than the day before. BOP is max red. TSV and MACD is racing lower. The other indicators aren't on here, but they are too. And I see a lot of people on StockTwits and Twitter wanting to buy the biotech pullback. And there's breakdowns everywhere, and it just isn't, in the S&P 500 stocks. You can look at the NASDAQ Biotech Index Fund, and you can see it also had a similar situation, closing in the lower half of its range, well off the intraday highs on very heavy volume, and neither TSV or MACD is favorable. So with that index looking poor, it is no surprise that the NASDAQ also had a similar looking session. And also, if you'll notice, while it did close above where it opened, a 48.63 close is below yesterday's close, which means it was down for the day, and volume was actually above average, once again giving us that beautiful scenario that keeps happening every year for the last, 7 years now? Low volume rallies followed by heavier volume pullbacks. Here we are again. But now, once again, TSV has turned back lower on the NASDAQ, which means full steam ahead for that, for the index, and MACD is not really rolling higher, so it could find resistance at its moving average before becoming more oversold. Now that we're in mid-range and the indexes look like this, it looks more likely that we are going to sell off instead of rally. The Russell 2000, similar situation. MACD and TSV is confused, so obviously expect this to be a little bit more choppier than the other ones right now. The bottom line is everything looks very weak, very, very short term. Remember what I said yesterday? What I needed to see today was an immediate reversal. We didn't get it yet, but it's not over yet because we didn't shit the bed is the best thing I guess I can say about this today. Or, well, it's Thursday night here. By the time you see it, it's going to be Friday morning. So the good thing is that we did not sell off really bad, but the bad news is we didn't rally. So if we don't rally by Friday, traders are going to have the weekend to think about this, and it's possible they might come back and be like, you know what, I don't like what I see. Lack of leadership also to take over from these stocks. I want to get out. And even on Friday or Thursday, we had full sells. KITE has officially failed with another heavy volume sell below the 50-day moving average. FRGI has failed on very heavy volume, very ugly, thank God for stops. DXCM has also failed because it is closing again below the 50-day moving average on heavier volume. It has also put in lower highs and it is rolling over. This is not a chart pattern I would even consider buying, even if it corrected itself in the short term, so it is a full sell. Also, speculative stock STM was a full sell, but I'm already out of it. Hopefully you are too. And then SWKS was a 25% sell intraday by going below these lows. Now moving up my final stops to just below these lows and just below these lows. So that's it. SWKS, half my position is there, half my position is there. SERV also confirmed its 20-day moving average close, so a quarter of it came off. I think 33% for me. I have more stops, I think, right here and then right here also. So that's where the rest are for SERV, 25% sell intraday. And AMWD, technically, win should never turn to a loss. So once this thing started to move higher, if you did get filled, you needed to get out of almost all of it at the minimum when it traded back to 53.36. But with a 52.37 close, it's closing right at where it opened. So to me, it's a 75% sell. And if you really want to be brave, you just sell 75%. You put the low a day 51.95 as your final cut loss. So that's it. So AMWD 75% sell. BSFT 50%. My 50% is going to be sold off if it closes below the low a day because it's on below average volume. And then FSLR, I'm all out of it as of intraday at some point Thursday. But it's technically just a 50% sell because it's on a closing base. It's not below these levels, but that's where my final sell stop was, and it hit it intraday, so I am gone. And what's not good is that out of all those sells on Wednesday, this is the only stock that is a potential rebuy. Out of all of those sells that we had on Wednesday, this is the only one. Another big hint that this market isn't healthy. And an even bigger hint, these are the only two stocks that I flagged in my scan. MFRM. This is really nice. This used to be a perfect speculator scan stock, and it just recently was a pre-perfect speculator scan stock. It currently isn't qualifying for them, and I believe it's due to the percentage gain from this year in March to last year in March. But you can see it's a clear cup with handle pattern on the right volume. You set buy stops just above here. 5% of the count value, no more, because it's not a perfect speculator scan, but it is canceling quality, so 2.5% account capital. I'll set buy stops if it can base out for just one more day, and I can see BOP go to a higher green level. And then also PATK, and it's only flagged because it's both a CanSlim and perfect speculator scan quality stock. Besides those two, there's nothing out there. Another bad possible sign for short-term stock market bulls.